Hey, welcome back. It's JWalter here. I noticed that Zillow announced a new housing market forecast over the next 12 months. So in today's video, I want to share that with you. They have some very bold predictions of what they expect to happen over the next 12 months. And believe it or not, they are even more bullish than their previous housing market forecast. So before we discuss their latest housing market forecast over the next 12 months, let's have a look briefly at their previous forecast to see what has changed. And before that, if you're looking for a real estate agent referral from virtually anywhere in the US, then check out homeandmoney.com/Jason to get connected with a great real estate agent in your neck of the woods. All right, with that said, let's begin today's video, starting with a look at their previous housing market forecast, which is for December 2021 to December of 2022. That was posted on January 19th of this year. I made a separate video about that. If you want to take a look at that, I'll leave a link below for you. In any case, Zillow expects home values to grow by 16.4% between December to December of 2022. Existing home sales in 2022 are expected to total 6.57 million in 2022. And this home value forecast of 16.4% is much higher than Redfin's and Realtor.com's forecast, for example. Redfin and Realtor.com expect home values to grow around 3% this year. So Zillow is saying it's going to be 16%. So let me know what you guys think about that below. But let's continue to read on. So existing home sales are expected to continue growing through 2022, approaching levels not seen since 2005. In my opinion, we would have to see a lot more houses to be listed for sale in order to have home sales reach 2005 levels. But let's go ahead and read on here. They say annual home value growth is likely to peak and plateau in the early months of 2022 before slowing somewhat throughout the end of the year. So home values are expected to grow by 4.1% in Q1 of 2022 and to end 2022 up 16.4% from the end of 2021. And that's with the pace of annual growth expected to peak at 20% in February of this year before gradually slowing. They also noted that they previously expected a 14.3% increase of home values from November 2021 and November 2022. So basically, their previous forecast for December to December 2022 is saying that we're going to have home values increase by 16.4%. Their previous forecast before that was a 14.3%. And that's driven by their expectations for tight market conditions to persist. So have a look at this. This is home sales. They're saying basically home sales are going to be flat for a while and then increase towards the later half of 2022. The dark line there is the January forecast. The December forecast is the orange line, or their forecast from 2 months ago. In addition to that, I'm only mentioning this because their new forecast is changing. So I'll go over that here in just a little bit. Zillow has an index for home values, and they say that their January forecast is at higher levels than their December forecast. They're basically saying that home values are going to be increasing and then go down and then plateau towards the last half of this year. But let's have a look at what they're saying this year to see what has changed. So this was published 2 days ago at the time of this video. This is for January 2022 to January of 2023. So they expect annual home value growth to continue to accelerate through the spring, peaking at 21.6% in May before gradually slowing to 17.3% by January of 2023. I thought, honestly, it was laughable at their previous forecast that we were calling for a 16.4% increase. So they went from 16.4 to now 17.3% increase. So comment below with your thoughts regarding that. So they say that annual home value growth is likely to continue accelerating through the spring before peaking at 21.6% in May. Their previous forecast called for a peak in February at 20%. So they're basically saying that the demand for houses is going to be extended, and also the percentage increase is also be greater as well. But they did say that it's going to be gradually slowing through January 2023, and we're going to have about 6.2 million existing houses to sell in 2022. We'll have to see about that. Monthly home value growth is also expected to continue accelerating in coming months, rising 1.7% in February and growing to 1.9% in April before slowing after that. By the end of 2023, the typical US home is expected to be worth more than $380,000. So Realtor.com, Redfin, and Zillow all have different ways of gauging what the median or the average home price in the US is. But Zillow is saying that it's going to increase by $380,000. Their current average across the US is $325,000. So they're saying that from January 2022 to January 2023, it's going to increase from $325,000 to $380,000 for the average home price across the US. They said that their robust long-term outlook is driven by their expectations for tight market conditions to persist. In other words, a lack of houses for sale, a low amount of supply. And then the demand for housing exceeding the supply of available houses. In regards to housing inventory, have a look at this. This is on Fred's website. A great website if you want to look at graphics for the housing market. They have a lot of different graphics to share. Anyways, this is housing inventory or active listing count, which is, of course, the number of active listings in the US. This is according to Realtor.com. So the source is always at the bottom of these Fred graphs. Anyways, Realtor.com is saying that we're at all-time record lows of 408,000 houses for sale. Redfin says it's 438,000, so very close. In any case, only 408,000 houses for sale. When you look at numbers pre-COVID, it's actually mind-boggling because ever since June 2016 to February 2020, let's call it April 2020, we had over 1 million houses every month that were listed for sale in the US. Ever since COVID hit, that dropped drastically. We had some normalcy in 2022, but after October, inventory plummeted once again. So they're saying that, Redfin's saying they basically have a lack of houses for sale, and that's gonna be driving up home prices. That actually could happen, but mortgage rates are increasing greatly, and more on that here in just a little bit. So Zillow went on to say the following: existing home sale volume, which is the number of houses that actually sold, is expected to grow throughout the spring home shopping season before falling slightly beginning in July. Overall, Zillow expects more than 6.2 million homes to sell in 2022, and that's up by 1.6% from an already strong 2021. So have a look at this. Here's their December forecast, and here's their new January forecast. So they're saying that in their previous forecast was calling for an increase of home sales in the US in 2022. That has changed though, because their January or new housing market forecast is causing for basically for a slight dip and then basically to plateau for the last half of the year. In addition, it's just the other way around for home prices. So this dark line again is for their new January forecast. Their orange line is their December forecast. So previously they were thinking that home prices are going to increase and then plateau and then decrease and then plateau for the last half of the year. Now they're saying that home prices are going to continue to increase through May before they decline somewhat throughout the year. However, Zillow had this to say regarding downside risks to their forecast here. They said elevated inflation heightens the risk of near-term monetary policy tightening. That basically means the Fed is going to be stopping purchases of mortgage-backed securities and also raising the federal funds rate, which all could further increase mortgage interest rates. That's what they said here. That would likely result in higher mortgage rates and weigh on housing demand. So speaking of mortgage interest rates, according to the Mortgage News Daily, as of today, which again is the 18th, the average 30-year fixed rate mortgage is 4.08%. That's an increase of 1.07% compared to 1 year ago. But have a look at this, because mortgage rates have been decreasing for the past 3 days in a row. They shot up greatly this year, but more recently they've been going down. So in February, we're at 4.05%. We increased to 4.12% in just 2 days, but the last few days have been decreasing. And that's because of the tensions between Russia and Ukraine right now, which is causing a lot of investors to flock to more safe investments like treasury yields, and that's causing yields to decrease, which further causes mortgage interest rates to decrease as well. So the change in the yield on the 10-year US Treasury note moves more or less in line with mortgage rates. So have a look at this, because the last year to date, the yield on the 10-year US Treasury note has been increasing greatly. But what's happened the last few days is that yield has been decreasing, and that has caused mortgage rates to also decrease. Mortgage interest rates are at the highest levels we've had since 2019. So we'll have to see how home buyers react to these higher mortgage rates. In addition, what are your thoughts about this new revised Zillow housing market forecast that is causing for a 17.3% increase of home prices over the next 12 months? Comment below. Also, if you got any value out of this video whatsoever, then please hit the like button. I greatly appreciate it. And also consider subscribing if you haven't done so already. Hope you have an awesome day. Look forward to seeing you on the next video.